Hi everyone. So let us wait for some time. I will start the class after 2-3 minutes. Hi everyone. So already in the previous sessions I discussed with you all regarding income from house property topics. So I am going to discuss with you continuation of that, and I'll just repeat the format once before starting the solution. So here actually house properties are two types. House properties are two types. Whenever we want to calculate income from house property of any assessee, we have to classify the houses first into two types. So they are, one is let out house, the other one is a self occupied house. Okay, so we have been doing problems of let out house. And in the previous sessions also I discussed with you let out house property problems and under different situations. Okay, first we discussed general problems, and later in yesterday's live class we discussed problems when actually unrealized rent is given in any question. Okay, now today we are going to discuss in this live class where we have vacancy loss. Here assessees are having some vacancy loss. Okay, how many are there in the live class? So here in case of income from house property, self-occupied house properties also are there, and we should calculate income from self-occupied houses also, but that we will discuss later. Okay, now we have been discussing income from house property of let out houses. Actually every assessee is having 5 heads of income, and if they have that income, then we should calculate that by using all income tax rules and regulations, and so that we can calculate their income, and that is actually that will be taken into account for tax liability calculation. So total 5 heads of income is there. One is income from salary, second one is income from house property, and third one is income from business or profession, and next one is income from capital gains, last one is income from other heads. Okay, so this is what actually the discussion which actually is useful for income tax only I want to discuss with you. So because let us wait for some time for the members. So anyone will join, or shall I start the class? Let me know so that I can start the class. So the problem what actually I want to discuss today is important one from the examination point of view. So where some calculation is there, and it is a little different from the previous one. Yeah, good evening, ma. So good evening. Anyone will join? Any others will join? Let me know that, so that I can start the class. So today I want to discuss one problem which is very very important from the examination point of view, and where actually we are going to learn the thing which actually we did not learn in the previous sessions. So here GAV calculation in step 3 will differ to some extent. Yeah, okay, I will wait. Meanwhile, just I will discuss about total how many incomes are there. Okay, so in case of income from assessees for calculation of tax liability, this is just a discussion which is related to income tax till we start the class, till the students comes. Okay, let me wait for some time, but why to sit idle? I want to discuss something related to income tax. So here, in case of income tax, every assessee may have 5 heads of income. So one is income from salary, and the other one is income from house property. Next one is income from business or profession, and next one is income from capital gains, and the last one is income from other sources. So if any assessee is having any head of income out of these 5, then that should be calculated, and that comes under tax liability category. Income tax department is going to impose tax on the income what actually the assessee is going to earn under these 5 heads. Okay, so in case of income tax you should know some information, that is who is non-senior, who is senior, and who is super senior. Non-senior means any assessee who is having the age less than 60 years. He is known as non-senior citizen. So tax rates are different for him in calculation of tax liability. And next, if any assessee age is above 60 years but less than 80 years, then we can call him as a senior citizen, and tax rates are different for him also. Exemptions and tax rates are changing. Next, if any assessee's age is more than 80 years, then we can call him as a super senior citizen. Okay, so this is about age classification under Indian Income Tax Act 1961. Depending upon that, we can, depending upon the age of the person, we are going to treat them as a non-senior citizen, senior citizen, super senior citizen. So in case of all these people, tax rates and exemption is changing. Okay, that is why age of the assessee is very very important. Okay, and here whenever tax liability is imposed, tax rebate will be given under section 87A if they are eligible for that. Surcharge also will be imposed in case if their income is more than the limit. Okay, so you should know about all this. I will discuss all this in the other classes after completing this income from house property. So few members joined in the class. Will any other will come, or shall I start it? Just give a message ma in comment box so that I will see, and if any others comes I will wait, otherwise I will start. Happy Shivaratri to all. Hope you celebrated festival nicely. Okay, let me start the class then. Okay, so I will start the class. So today we are going to discuss income from house property, one problem and its a solution. So here we have been discussing about let out house property. In previous live classes I discussed a few problems, and house property is divided into two categories. Whenever we calculate house property income or income from house property of any assessee, we have to see whether the house is a let out house or self occupied house. If the house is a let out house, how we will identify the house is a let out house? If any house is given on rental basis to another person, owner is giving the house on rental basis, and how much income owner is getting, okay, that we should see, and we should calculate tax liability, and we should calculate income from house property of that person, okay, that assessee. So whenever he is giving any house on rental basis to another person, we have to call it as a let out house. Self occupied house means it is a house actually where in the same house owner himself is staying. Owner himself is staying in the house. We can call the house as self occupied house. Okay, so now in the previous live classes we discussed let out house property, and we discussed how to calculate income from let out house properties. And now we are going to discuss one more problem, and its a solution. And this is very important because here we are going to have a little change in the question. Okay, in the beginning live class we discussed a few problems where actually that was regular problem. We calculated gross annual value and all that, and later in other yesterday's live class we discussed something extra. So where actually we have unrealized rent. If we have unrealized rent, how to calculate that, okay, how to do income from house property. So we learned in the previous session. Now here in this class we are going to learn solution in case if there is vacancy loss, vacancy period, okay, for the house. So how to deal with that point and how to calculate income from house property. Let us discuss the question. Let us go to question once. So this is our question. This is our question, and I will discuss the question with you. Everyone just concentrate, and understanding question is very important, and we should collect all the important points what actually we need from the question, so that it will become very easy to do the solution. So let us discuss the question. Okay, here Sri P.S. Reddy. Sri P.S. Reddy, he is the assessee. Assessee name is P.S. Reddy. He is the owner of one house. So he is having one house property. He is owner of one house property. And here what is that actually it is consisting? That house property is consisting of building. Okay, in that house property what he has, he is having one building. Okay, building is there, and next what else he has, he is having one land also. So both are there. He is having one building and some open land also is there for him, and we are going to see what actually is the information and how to calculate that. Let us see. So here building is there, and open land is there. Some land is there for what? For car parking. So he is giving that land for car parking. Okay, so and a kitchen garden. Okay, he is having kitchen garden also, some open area and with some little facilities he has that, and one building is there. Okay, so two are there, and we can call those two as house properties for him. Those two are properties for him, and building he is giving on rental basis, and land he is giving for car parking. Okay, so let us see what actually is the information here. The building is let out. So owner is giving the building on rental basis. Okay, he is letting the house for residential purpose. So he is giving the building on rental basis to another person. So on a monthly rent of what is a monthly rent here? 20,500. So monthly rent is 20,500. Okay, so every month he is collecting 20,500 from the assessee, from sorry, not from assessee, from the tenant. Okay, so here he is giving that building on a monthly rent. Who is our assessee? PS Reddy. So PS Reddy is giving that building on a rental basis to another person. And how much rent he is collecting? 20,500. Okay, every month he is collecting 20,500 rent. This is actual rental value. So actual rental value for 1 month is 20,500. Let us discuss complete question, then we will take the details in the details information solution box. Okay, 20,500. So this 20,500 is the actual rental value. Okay, hope this is clear for everyone. And next, municipal valuation. Municipal valuation means municipal rental value. So how much municipal rental value actually is given here? 2 lakhs rupees. So municipal rental value is 2 lakhs. Municipal valuation is nothing but municipal rental value. It is nothing but MRV. So MRV is how much here? 2 lakhs. Okay, so with the information what actually I read here, we came to know that monthly rent is 20,500. Every month he is collecting 20,500. That is actual rental value. And next, MRV, municipal rental value, municipal valuation is 2 lakhs rupees. If they don't mention whether it is for 1 month or 1 year, then we have to assume that it is for 1 year. So municipal valuation 2 lakhs rupees is for 1 year. Okay, if it is per month, clearly they will mention per month or monthly rent. So here that is for 1 year. So MRV is for 1 year. Okay, and next, rent of a similar building. Rent of a similar building means what? It is FRV, fair rental value. I already discussed in the previous classes also. Rent of a similar building is nothing but fair rental value, FRV. Okay, FRV is how much here? It is 20,000 per month. Clearly they mentioned that it is 20,000 per month. So FRV is 20,000 for 1 month, but we should take it for full 1 year. Next, open land. So we discussed in the beginning of the class here in the question, in the beginning of the question, that assessee is having one building as well as one open land. 2 are there. Okay, so here building is giving for rent on rental basis to another person. And what he is doing, what actually is happening to opening land? Opening land, is it clear, visible, students? Okay, so I think some lagging is there. Now is it okay, students? Can you see me? Okay, so let us continue the question. So here open land, what I discussed in the beginning of the question, he is having one building and open land. 2 are there for the assessee, and building he is giving on rental basis. Open land he is actually using for car parking business. Let us see what actually it is. So open land is let out. So he is giving on rental basis that open land also. And for what? On a monthly rent of 5,000 rupees. Okay, so he is giving that open land also on rental basis for how much rent? For 5,000 rupees. to run car parking business. So actually to run what business? To run the car parking business. He is giving that open land also on rental basis for 5,000 rupees. Okay, every month he is collecting 5,000 rupees from that open land from the tenant. Okay, so two are there. You have to observe, we have to do two statements here. One is for building, we have to calculate income from house property from building, as well as income from the open land. Two we should find out. Okay, so that open land rent is how much? 5,000. he is collecting 5,000, and that land is given on rental basis for running the car parking business. Okay, and next, during the previous year, so in the previous year what happened? During the previous year, the house was vacant for, the house was vacant. Okay, the house was vacant for how many months? 1 month. So in 1 month period, tenant was not there in the house. Okay, so assessee could not receive any rent from that. Whenever house was vacant, then he won't receive any rent from that. So how many months actually the house was vacant? That is very very important, because in case of actual rental value calculation, we should consider that point. Next, the rate of municipal tax. So rate of municipal tax is how much? 15%. Municipal taxes percentage is given. We should always calculate that 15% municipal taxes percentage on MRV. Then we will get municipal taxes amount. Okay. He constructed the house by raising a loan. Okay, so he constructed that house what? By taking one loan from HDFC bank. Okay, he is taking that loan from HDFC bank. Okay, but we are not bothered about whether the loan is how much and from where he is taking. We are bothered about what is the interest rate. Okay, and we are going to give, so that amount of loan is due. How much it is? It is outstanding amount is 2 lakhs, students. So 2 lakhs is the outstanding amount. Is it visible, students? Any lagging is there? The video is lagging today. Let me check once. Yeah. Wait for a while. I'll check it. So wait for a while, students. Activate చేయమని deactivate ఉంది, ఒకసారి యాక్టివేట్ చేసేసి
ఏంటా ఆ పాజిషన్
is here. Little less. Little. Students, can you see this? Is it visible? So there are some issues, that is why I am unable to show clearly. Okay, now get back to our discussion. Everyone, just concentrate. So here actually what we have here, interest is given. Okay, interest paid during the previous year is how much? 12% students. Okay, so interest paid is how much? It is 12%. Already we discussed that interest paid is 12%. Okay, on outstanding loan amount, what is the outstanding loan amount? 2 lakhs. Still 2 lakhs loan is due. So 2 lakhs loan is pending, still that much of amount is due. So he has to pay 2 lakhs worth of loan still, and we should calculate interest 12% on 2 lakhs only, because we are not bothered about total loan amount. What is outstanding loan? On that we are going to pay interest. So 2 lakhs is a outstanding loan. Okay, so next, the other expenses are, what are the other expenses here? The other expenses are given here. How much other expenses here? Fire insurance. What are those actually? Fire insurance, how much it is? 800. So we don't write fire insurance anywhere else. Collection charges also we don't record. Okay, and next, repairs. Repairs also we don't take anywhere else. Next, ground rent. Ground rent also we don't take anywhere. And next, brokerage paid to raise the loan. So for taking loan, some brokerage charges he paid, that is 750 rupees. So this also we are not going to take anywhere. Okay, so these all information we don't require. Whatever charges are given here, we don't record in the statement. Next, compute income from house property. We are going to calculate income from house property now. Yeah, let me go to solution. So again there are some disturbances. Okay, so let me go to solution now. So here, compute income from house property. They are asking us to calculate income from house property. Let us go to our information box and let us record everything. Okay, so here we have our information box and we are going to write that. Okay, so what we are going to record here, we are going to record all the details what actually we record here. So what we record in regular cases, we record MRV, FRV, okay, ARV, we record SRV if it is given. So we are going now so that it will be easy for us to do the solution. Let us see ARV first. So ARV means what? Actual rental value. So actual rental value is how much? You can see in the question. How much rent he is collecting every month? He is collecting 20,500 every month. So video is lagging. I don't know what happened. So this is lagging. I don't know what. Will wait for few 2-3 minutes, ma. Can you listen my voice? If so, I will just disconnect this video and I will. I will teach only audio class, no video. You tell me. Okay, audio is clear. Okay, so I will discuss with audio only. Okay. So let me try for the last time. Okay, let us go there. Okay, let us go and record the information. First, ARV. So ARV is actual rental value. How much actually he is collecting? ARV. So let us discuss that. How much he is collecting? 20,500. He is collecting 20,500, but 20,500 is for 12 months. But what is happening here? 1 month rent. 1 month rent he is not receiving. Why he is not receiving 1 month rent? Because house was vacant for 1 month. Okay. So house here is vacant for 1 month. So I will. Audio is clear. Okay, I will delete this video. Is it coming video? Yeah, now I can see. Okay. Okay, students, you can. Yeah. Now what you do? You see what is ARV here. ARV is 20,500. 20,500 into 12 we do actually. But here 1 month house is vacant for 1 month. So it should not take for this. Here see ARV. Okay, ARV is actually how much here? 20,500 into 12. Okay, so generally we take for 12 months. You take here 12 months. You take here for 12 months. But whenever we calculate GAV, there we will do that point clearly, and we will understand. I will discuss with you how to deal with that and how to calculate GAV. Okay, because house is vacant for 1 month. Let us go there. Okay, so here 20,500 into 12. 20,500 into 12. So it is 2,46,000 students. 2,46,000. Okay, so next let us go and record the next one. ARV is 2,46,000, and next one is what? Here you can see building is let out for residential purpose on a monthly rent of 20,500. We recorded that. Okay, we took it for 12 months. Municipal valuation. Municipal valuation means MRV. MRV is 2 lakhs. Let us go and take MRV now. Okay, MRV means municipal valuation. MRV is how much here? MRV is equal to 2 lakhs. So 2 lakhs is for 1 year. Okay, so again don't multiply that by 12. And next, let us go and discuss the next one. Next one is what? Rent of a similar building. Rent of a similar building is 20,000 per month. So rent of a similar building means it is FRV, fair rental value. So fair rental value is 20,000 per month. Let us go and record that also. But here that is given for 1 month. So we should take it for 1 year. So FRV is equal to how much they gave here? 20,000. So 20,000 into 12. So how much we will get? 20,000 into 12. We get 2,40,000. Okay, so that is FRV. Let us go and check the question for SRV. So do we have SRV? We did not actually have, we don't have SRV, standard rental value. They did not give here in the question, because we discussed a complete question. Nowhere we came across with a standard rental value. SRV, standard rental value, is not available. Okay, so standard rent is not there. Hope this is clear for everyone. If standard rental value is not given in any question, we are not going to do second step. Okay, if standard rent is given, then only we will go to second step. Here we don't go to second step. Okay, so next, what else they have given here? Next, open land details are given. Open land details are there, and open land is let out for how much rent? That is for 5,000. Okay, so 5,000 is a rent for open land. Let us go and take that also. So open land rent. Open land rent. So it is how much? It is rupees 5,000 for 1 month. 5,000 per month. Okay, so we should multiply that by 12. So let us discuss the next one. So here, what is they have given here? Municipal taxes. House is vacant for 1 month, that we are going to consider at the time of calculating gross annual value. Now, the rate of municipal tax is 15%. So municipal tax is 15%. Let us record that also. Municipal taxes. Municipal taxes. Municipal taxes are how much percentage? It is 15%. Okay, whenever it is 15%, we should calculate. On what we are going to calculate? Municipal taxes we calculate on MRV always, remember. Okay, so let me calculate here only. We can calculate here, or we can calculate there in the solution, that format. Okay, so calculation of income from house property, there we can calculate municipal taxes, otherwise we can calculate here. So municipal taxes are 15%. So what is, always remember students, municipal taxes should be calculated on MRV, municipal valuation. What is municipal valuation here? 2 lakhs. So 2 lakhs into 15 by 100. How much we get? We have to check. Okay, 2 lakhs is a MRV. On that 15% tax. So 15 by 100. We will get how much? We will get 30,000. So 30,000 is a municipal taxes amount. So we will give that as deduction and in the statement from gross annual value. Let us go and see the next one. Next one is he constructed the house by raising a loan from HDFC. Okay, so he has taken the loan from HDFC bank, and interest paid during the previous year is 12%. So what is the interest rate? 12%. So interest on loan is 12%. So it is how much percentage? Interest on loan 12%. So we should calculate that interest on loan on outstanding loan amount, because total loan he cleared, only some amount of loan is there, outstanding loan. Outstanding means what? Still that much of loan is pending to pay. So how much it is? Outstanding loan amount is 2 lakhs. Okay, so on 2 lakhs we should calculate interest. Let us go and calculate that. 2 lakhs into 2 lakhs into, what is the interest rate here? Interest rate is 12%. So 2 lakhs into 12 by 100. Okay, so how much more? 2 lakhs into 12 by 100. How much we will get? You can check it. It is 24,000. Okay, so let us write it 24,000 24,000 is interest on loan. And next, let us go back to question. Fire insurance, here they mentioned all the expenses. Fire insurance 800, collection charges 1000, repairs 3000, ground rent 2500, brokerage paid to raise the loan 750. These all we are not going to take anywhere in the question. They give because assessee is paying, but we are not going to record anywhere in calculation of income from house property. So there we are going to take into account only municipal taxes and interest on loan, standard deduction we are going to give. Okay, and ARV, SRV, MRV, FRV, these all we need for calculation of GAV. And let us go to our information box. So this is our information that we took from the question. And let us go to our solution. Let us calculate income from house property. This is the format that we should use for calculation of income from house property. So this is let out house, we should mention it as let out house. And next what we have to do is we have to draw columns, particulars amount to columns, and on the top we should give the heading. Always heading is same whatever I mentioned here. Computation of income from house property of Mr. Name of the assessee should be mentioned here. So what is the name of the assessee here? Sri P.S. Reddy. You can see what is the name of the assessee? Sri P.S. Reddy. He is the owner of the house. He is going to receive income, and we are going to calculate income from house property for Sri P.S. Reddy. So let us record here P.S. Reddy. So income from house property of Mr. P.S. Reddy. Okay. So for the assessment year 2024 and 25. Okay. And next in the format, first always we are going to record gross annual value. That is nothing but GAV. GAV is nothing but a gross annual value. Okay. Hope this is clear for everyone. Always first we are going to take gross annual value, and gross annual value will never be given in the question. We are going to find it out. How? There are some steps to calculate the gross annual value. Let us go to calculation of GAV. Here you see, actually for calculation of GAV there are 3 steps. Okay, but second step we need to do only if standard rental value is given in the question. Otherwise we don't go to second step. Okay, so let us see here step 1. What is step 1 here? Higher of the following two is taken as ERV. We are going to take ERV as higher of the following two. Okay, ERV means expected rental value. So what is the first one? Municipal rental value means MRV. So MRV is how much? We already took here in the question. So it is how much? It is 2 lakhs. So we are going to take 2 lakhs now. MRV is 2 lakhs. Let us go and take 2 lakhs in the place of MRV. Okay, it is 2 lakhs. Next, fair rental value is the second one. Fair rental value short form is FRV. So FRV, how much they have given in the question? Let us check. Already we took in the information box FRV. FRV is 2,40,000. So let us take in the place of FRV 2,40,000. $2,40,000. Now we have to select highest one out of these two, because they said clearly that which one we are going to select. Highest one, higher. They said clearly here that which one we are going to select. Higher one. Okay, higher one. So highest one we are going to select out of these two. So which is highest one? 2 lakhs or 2,40,000? It is 2,40,000 only. So you have to circle around 2,40,000, but what I am doing, I am changing the color of that. So okay, I selected 2,40,000 and we should name it as expected rental value. That is nothing but ERV. ERV means expected rental value. So it is how much? It is 2,40,000. Okay, and next we will go to second step. First step finished, but if you want to go to second step, standard rental value should be given. Okay, but in this question we don't have standard rental value, so second step is not required. Okay, hope you understood this point. So whenever standard rental value is given in any question, then only we will do the second step, otherwise we need not to do second step. Okay, so I am deleting that because we don't require that. Now we will go to first step direct. We will go to third step directly. Okay, so what is the third step? Why we are just jumping to third step? Why we are not doing second step? I said just now that standard rental value is not given. Let us go to step 3. So step 3 is what? Higher of the following two is taken as GAV. This is what we want. Okay, so here adjusted ERV. Adjusted ERV we get from the second step. So we did not do second step, so we don't have adjusted ERV. Then we should take here in the first place, in the third step, previous step answer. So we don't have second step, so we will take first step answer here. Okay, what is that? It is nothing but expected rental value. So we will take expected rental value here in the place of adjusted ERV, because we did not do second step because standard rental value is not given. So let us take here expected rental value. Expected rental value short form is ERV. Okay, so already in the previous step we calculated that. So let us take that. That is 2,40,000. Okay, now next one is actual rental value. Actual rental value means ARV. So actual rental value means it is ARV. Okay, so ARV is how much? That should be taken here. So ARV is how much? For full 1 year, we should take for full 1 year. It is 2,46,000. ARV is 2,46,000 because he is collecting 20,500 per month as rent, and 12 months 2,46,000. Okay, but let us go to our statement. Here I will record 2,46,000. Now you tell me, out of these two, which actually is the highest one, because we should select the highest one. So what is the highest one here? Highest one is 2,46,000. Okay, so you have to select it, and you have to draw a circle around the highest number, but here I am changing the color of that. It is what? 2,46,000. I am selecting highest one. But here there is one point in this problem. House was vacant for 1 month. Okay, whenever vacancy is there, and in the third step we should show the effect. This is the point which is very, very important. Okay, so whenever vacancy period is there, then what we should do? Here we have to select first highest one. In the third step we selected what is the highest one here? Highest one is 2,46,000. After selecting that, okay, we selected highest one, that is 2,46,000, and from that what we should do? We should deduct vacancy period loss. Okay, how many months the house was vacant? It is vacant for 1 month. Okay, so assessee did not receive 1 month rent. What is 1 month actual rent? That is, you can see here. So it is how much? It is 20,500. So 1 month rent is 20,500, that he is collecting from the tenant. So 1 month house is vacant. So he did not receive 1 month rent. That should be taken here. Okay, if 2 months rent not received, so we should take 2 months rent. Here only 1 month rent not received. So we are going to deduct 20,500 here from the amount what we selected. Okay, first in the third step we should select the highest one. ARV also should be taken for 12 months. Expected rental value we should select from the previous step, and we should select highest one. After selecting highest one, what we have to do is we have to deduct vacancy period amount. Okay, here our house is vacant for 1 month, so 1 month rent we are deducting. So how much we will get now? If we deduct 1 month rent, 2,46,000 minus 20,500. So we get 2,25,500. Okay, so we get 2,25,500. Hope this is clear for everyone. Okay, so this is what is our GAV. Gross annual value is 2,25,500. This is gross annual value. Hope this is clear for everyone. Okay. So GAV finished. We calculated GAV. This GAV point in this problem is very important because vacancy period is there. Okay. So next, let us go to our solution to the format. Okay, we will record in the place of GAV 2,25,500. So I am recording here 2,25,500 in the place of gross annual value. And after this we will deduct municipal taxes. So municipal taxes we calculated already here. Municipal taxes is 15% and calculation also we did. Okay, so 2 lakhs is MRV, on that 15% we calculated, and how much we are getting? 30,000, that is municipal taxes amount. Let us go to our solution and record here. If you want, you can mention here also in the calculation. So 2 lakhs is MRV, on that how much percentage you are calculating? 15 percentage. So how much you will get? You will get 30,000. Okay, so that is municipal taxes calculation. And we will write 30,000 in the amount column. Okay, so they did not mention whether municipal taxes are paid or due, then we can assume that those are paid. So how much it is? 30,000. I recorded 30,000, and next step is finding out net annual value. We should deduct 30,000 from 2,25,000 and see how much we will get. Okay, so how much we will get if we deduct that? We will get 1,95,500. 1,95,500. Okay, and we should name it as what? Net annual value, and short form of net annual value is NAV. So this is NAV calculation, but problem not finished. We did not calculate house property income, and we have to give deductions. Okay, from NAV we have to deduct something. What we have to deduct? Deductions under section 24. Let us deduct those deductions under section 24 here. Okay, so how many deductions are there? 2 deductions are there. First one is standard deduction. Always first deduction is standard deduction. Standard deduction is also known as statutory deduction. So we have to give the deduction under section 24 subsection A. How much it is? Always 30% on NAV. This is 30% on NAV. Let us calculate now. We can calculate here itself. Okay, what is NAV? 1,95,500 into 30 divided by 100. So how much we will get? You can calculate it. So we are getting 58,650. Okay, so this is standard deduction. Let me record that in the amount column. Standard deduction we will record in the amount column. Okay, hope everyone understood this calculation. So 58,650. Okay, so I recorded standard deduction amount also in the amount column. And next, interest on loan. Next deduction is interest on loan ma. So this is under section 24B. So compulsory deduction. In case of interest on loan, we should not see whether it is due or paid. Okay, if it is given in the question, we will give as deduction. So let us go and check whether we have interest on loan or not. It is there. Interest on loan is how much percentage? That is 12%. And on what we should calculate? Actually on loan amount we should calculate this 12%. But he paid loan amount, and what is the outstanding loan amount now? 2 lakhs rupees. So on that we calculated already. How much we are getting? 24,000. 24,000 is the interest on loan. So we can take in our format in the place of interest on loan 24,000. If you want, you can calculate here also. Okay, so in the beside that item you can calculate. So 2 lakhs is the loan amount into percentage is 12%. Okay, what is the percentage? 12%. So we can calculate 12% here. 12 by 100. So how much we are getting here? If we calculate, we are getting 24,000. 2 lakhs into 12 by 100. 24,000. Okay, 24,000 is a interest on loan. Okay, so we recorded already in the amount column. So this is how we have to do interest on loan calculation, and we should give as deduction. Now we should deduct these two deductions from NAV, net annual value. Our net annual value is 1,95,500, and we should deduct 58,650 and 24,000 from 1,95,500. Okay, so you deduct it, 1,95,500 minus 58,650 minus 24,000. So you will get 1,12,850. Okay, you get 1,12,850. So this is in positive amount, 1,95,500. NAV is more than the deductions. That is why the amount whatever we get here after deducting, that is positive amount, 1,12,850. So we can call it as income. Okay, it is income from house property. In the previous live class, we actually got the loss from house property, because after deducting deductions we actually got a negative amount, so we called it as a loss from house property. But here it is a positive amount, so we have to call it as income from house property. Okay, this is the answer. Okay, so income from house property we calculated for whom? For PS Reddy. But here in this problem he is having two properties. One is building. So building house property income we calculated, and he is having open land also. We should calculate for open land. But in case of open land, since that is not building, that is not given on rental basis, we don't have MRV, FRV, SRV, ARV, all this. Only how to calculate that, let us see. Okay, I will show that. So open land, income from open land. Okay, so how much he is collecting as rent from the open land, that should be taken into account, and that is treated as his income, because he is receiving rent whatever he is collecting from the open land, because he is having open land and he is giving on rental basis for car parking business. So he is collecting every month rent from the open land. How much he is collecting, you can see here, we already took. So open land rent is 5,000 per month. Okay, how much he is collecting from the person to whom he has given the land on rental basis? 5,000 rupees per month. Okay, so he is collecting for 12 months. We can assume, because they did not mention anything in the question. So he is collecting for 12 months completely. 5,000 into 12. That is his income from that. Okay, let us calculate it. Rent received from open land is how much actually every month, how much he is receiving? 5,000 rent. So 5,000 into 12. How much we will get? 5,000 into 12. Students, you can do calculation. Okay, so 60,000. So we are getting that rent as 60,000. So he is collecting 60,000 rent from open land. Okay, so here he is not incurring any expenses on that open land, and we are not going to give any deductions here except statutory deduction. Okay, in case of here buildings, if he gives any building or any house on rental basis, we give one standard deduction. No? Okay, always we allow that standard deduction for every assessee if he is having income from house property. Okay, so how much? 30%. So that deduction we can give for the open land also, but remaining all we don't allow. Okay, so let us take that. Let us take that deduction less deduction under section 24. Okay, so what deduction he can avail? Only one deduction. What is the deduction? That is standard deduction. He can get only standard deduction. Standard deduction or statutory deduction, both are same. Standard deduction under section 24 subsection A. How much we can give? We can give 30%. Okay, so here we don't have GAV, NAV, all that. So whatever rent he is receiving, on that 30% should be calculated. So how much rent he is receiving? 60,000. So on that we are going to calculate 30%. So let us calculate that. 60,000 into 30 divided by 100. Okay, so how much we will get? We will get 18,000. Let us record 18,000. Okay, and let us do totals of this. If we deduct this, how much we will get? You can see how much we will get. 60,000 minus 18,000. 42,000. We get 42,000. So 42,000 is the income that is taxable. Okay, so he is going to pay tax on 42,000 income. Hope this is clear for everyone. Okay, in this way we are going to calculate in case if any open land details are given. Okay, so only standard deduction will be given in case if open land is given. Okay, we should see what actually is rent that he is receiving from the open land. We should concentrate on that point. He is receiving 5,000 rent for 1 month, so we should take it for 12 months. And 12 months, how much he is getting for 12 months? 60,000. And don't give any other deductions in case of this open land. We should allow only one deduction, that is standard deduction under section 24A. That is always 30%. No? So we should calculate 30%. If we calculate 30%, how much we are getting? 18,000 we are getting. Okay, so 18,000 you can write, and you should deduct that 18,000 from 60,000. So how much we will get? 42,000. So 42,000 is a income from house property, that is open land. Okay, here he is having two incomes. One is income from house property of that building, and here open land 42,000. Hope this is clear for everyone. Okay, in case of any doubts you can mention in the comment section. I will show complete solution of this. So today we calculated let out house, but what is the main point that we concentrated here? In our problem we have vacancy period. Whenever vacant, the house is vacant for any month, so how to deal with that? How we actually adjusted that point in GAV calculation. In step 3 we adjusted that point, so you have to note that point, and that point is very important. Okay, so this is our question, and this is the information that we took from the question. Always it is very important to take information from the question, so that it will become easy for you to do the solution. So we took all this from the question. And next, this is our solution. Okay, so computation of income from house property of P.S. Reddy, Mr. P.S. Reddy, for the assessment year 2024 and 25. So this is our solution, main part. Here we have to calculate in this way. Okay, income from house property by following all the rules and regulations. So how to calculate gross annual value you should know, and how to give municipal taxes as deduction you should know, and net annual value should be calculated, and deductions under section 24 should be given. Only two deductions are there, so standard deduction and interest on loan under section 24B. Okay, so these two deductions should be given, and then we will get income from house property. This is what actually we calculated here, and we are getting 1,12,850 as a income from house property, that is building. Okay, so here you can mention building. This is what building. Okay, and next here I have shown calculation of GAV. Always this calculation of GAV should be done under the format. Okay, just now we did know calculation of income from house property. Under that you should do that. So the 3 steps we should follow, but here we followed only 2 steps, because second step we did not do in our question standard rental value is not there, so we did not do second step. Okay, that is not required. We will do the second step and we consider that and we do calculations there only if a standard rental value is given. Okay, and here the last point is very very important, step 3. So in case of step 3, first we selected highest one, but later on after selecting we deducted vacancy period rent. Okay, a house was vacant for 1 month, so actual rent that we receive for 1 month is 20,500. We deducted from 2,46,000. That point is very very important whenever house is vacant for any months. Okay, so gross annual value is 2,25,500. Next, this is income from open land. Here in this problem we have open land also. So income from open land also we calculated. We should calculate it because owner is giving the open land on rental basis for 5,000 per month rent, because the other party who is taking on rental basis, he is doing car parking business. So 5,000 into 12, 60,000 he is receiving, and we can give one deduction. Okay, only standard deduction, remaining all should not be given. So the rent how much he is collecting should be taken into account, and we have to give deduction under section 24A, that is 30%, and we are getting 42,000. Okay, so this is what actually that I discussed it today. Hope everyone understood, and we will meet tomorrow again. So I want to stop the class for today. Hope you all understood. Tomorrow we will again discuss the other problems what actually are very important, and in one class I will discuss question paper pattern also with you all. Okay, so if possible in tomorrow's class I will discuss the question paper pattern and what you have to learn. So I will discuss all this in tomorrow's class. Hope you understood, and for today I will wind up the class. So once again, happy Shivaratri to all. Okay.